What is going on, guys? Today we are going to be talking about Mastercard stock. This stock is up 25% on the year, so nothing crazy, but definitely a healthy amount. And this is just one of those companies that nearly has a monopoly along with them and Visa in this industry. And it's just they have phenomenal financials. So normally it's just a matter of how is the valuation looking because as far as growing net income and stuff, there's normally no problem there. So this is a $483 billion company. If we look at analyst expectations, we have last year's EPS at 12, this year's at 14, and the next year's at 16, averaging about 12% revenue growth. And then if we go over here to the forward PE ratio, we could see that trailing PE is at 40, which is still pretty close to the average, but slightly on the higher side. And then forward PE, same thing. It's pretty much in the average, but slightly on the higher side. But when we go check out this company's financials, you can see that the growth for this company's revenue is very consistent. We're looking at 11% growth per year on average, and pretty much every single year it goes up besides for 2020. But since then, 2023, $25 billion of revenue, and then trailing 12 months, we're looking at now 27 billion. So it pretty much always goes up. Let's see, net income we have $12 billion. And the crazy thing with this one is so trailing 12 months for this is $12 billion in net income. Just 4 years ago, it was about half of that. So they've doubled their net income in only 4 years, which is insane. The cash to debt ratio is not good, but it is what it is. Cash 11 billion, debt 17 billion, so not really good, but still everything else looks great for this company. Dividends go up, they raise their dividends, shares outstanding go down. Their return on capital numbers are outstanding. There's not many companies that can say they do 53% return on capital. And how I said, this is just one of those companies that has a huge moat. Them and Visa control about 80% of the market, and there's not much you can do. I mean, their network and their processing is just it's not easily competable, really. So this is a good stock to own. I would say just be careful with the valuation because as you can see, we're about 40 times trailing earnings, which is definitely on the higher side now. I would want to pay 35 times or so. 35 times. I'd be happy paying 35, definitely under 35 too. If you can get it at 30 times, that's even better. So this is probably a good one to buy once the market crashes and it's trading at 30 times earnings. So that is my analysis for Mastercard. Thank you very much for watching, and I will see you in the next video.